Welcome to the Daily Brief, where I'll go over the highlights in the market for Monday, October 3rd, and then see how things look for Tuesday, October 4th. And we had a really solid up day, but we have to ask the question, was this a dead cat bounce from being very oversold? Some of the biggest up days that we see are in the context of a down market, just like some of the biggest down days that we see are in the context of an upward market or bullish market. We don't really know at this point. It has helped a lot of our charts to improve. It was solid overall, but we saw value really outperforming growth. That's one thing that was kind of interesting. So it hasn't really improved our sector rotation charts, but the market was due for some kind of a bounce, specifically because it's the first day of the new week, the new month, and the new quarter. So that probably helped things as well. But we have to say, can it continue? So let's go back and talk about what happened. We did have a higher open. The futures were positive during the night. Europe, it was down slightly, not all that big of a deal, but the S&P futures really caught some fire. We didn't have quite as positive an open as the futures were indicating, but once we did open, we pushed prices above R1 at 36.43. As the day went on, and this is a typo, we went higher after that. We fell back a little bit and then kept going higher. Buying continued to almost, that should be R2. We never got up to 3,700. That's the next level. I kept watching it going, are we going to make it? Are we going to make it? And we just fizzled out right below 3,700. Going into the close, there was still some time left. There was some selling that took place, so we ended up closing off of the highs, but we still ended up being 2.5 up 2.59%. We were up over 3% at one point when we got close to 3,700. Volume continues to be above average, and the technicals, they're still negative overall. We have to wonder, is this what we saw last week? We had one good day on Wednesday last week where it looked like things might be improving, only to have it completely fall apart on Thursday and Friday. We're seeing a bigger convergence of a lot of our indicators that's suggesting that we're at a bottom, but we've seen that before. And we've been in this situation many times in 2022 where we get some kind of a short-term bounce back up, but then it fizzles out at some kind of resistance level, or if the Fed decides to come out and say, no, we're not going to turn more dovish. We're not pivoting after all. Those kind of things have a tendency to happen. Are they going to continue to happen in the future? Because the market is still fixated on inflation and interest rates, not only in the US, but in foreign countries as well. We have the geopolitical concerns. It looks like things are calming down, at least right now in the UK, from the situation that they're working through. But Russia continues to be at the forefront here, not only with the Russia-Ukraine situation, but different rumblings that are going on right now. And that could really be negative for the markets or positive. You never know what could happen there. And then any Fed speak that we might get. So what are some comments? We had a strong start to the new week, month, and quarter. Right now, we just kind of have to treat this as a bounce from oversold conditions. It could turn into more, but it also could fizzle out at this point. There are so many headwinds with this market, but we have a lot of things moving in our favor. Things are a lot more favorable seasonally. We're more extreme with sentiment than we were before. You've got people just convinced that the market is never going to go higher ever again, and that any kind of a bounce that happens is going to die quickly. And that still might be true, but we have to follow the charts and just analyze things as they happen. But we did hit one major thing, and I pointed this out in the daily and weekly video. We came down to that 200-week moving average, and that's right where we closed on Friday, and we've bounced up off of that. If we do get some legs to the upside, that could really help things coming off of that level. If we break below that, if we turn and go back down, that could be quite negative. And even with the improvements that we saw in Monday's session, we are still oversold. And then interest rates fell mainly because of what was happening in the UK. The government came out and said, remember that tax cut we wanted to give to the wealthier folks? Well, we're not going to do that now. And that seemed to help things a bit in the UK. We also had weaker than expected ISM manufacturing and consumer spending. Okay. Consumer spending data was weaker than expected. We're going through a period right now, and we've been in it for a little while, where bad news is good news. If reports come out and they're weaker than expected, because everybody's worried about interest rates having to go higher and higher and higher, if it comes in weaker than expected, that's tending to help the market and helping bond prices to go up. This is one thing that really, one day, we get one day of bouncing, and automatically this scenario that, oh, maybe inflation is topped out and the Fed is going to turn more dovish, that comes immediately out of the woodwork. We have to be very suspicious of this. Maybe this time it will actually happen, but there's been nothing from the Fed to suggest this, at least from what I found. It's the market just baking this into things, thinking, well, yeah, look at how weak ISM was. And I'll go through that here in a moment. We've just got to start coming down with these interest rates. The Fed's just got to turn more dovish and help stock prices go up. We don't have any evidence of that yet. And so the fact that this scenario is floating around again with one update, it came out last week with the update that we saw on Wednesday, only to be dashed right after that. So what I'm doing is I'm just looking at the charts and have them telling us what's going on. Forget this scenario, forget this idea that this is going to happen, that's going to happen, because we've been four times bitten. We should be 10 times shy with this. So because the markets have been burned by this already, and if you're a longer term trader, it's been very, very frustrating for you. We still have the same yield curves inverted, the 30 to the 5, the 10 to the 2, and the 10 to the 5. Sentiment, even though it did improve in Monday's session, it's still pretty extreme. And we even have some other indications in the full length video that I go through that confirm this, that sentiment has been getting pretty extreme negative. The final IHS market manufacturing PMI, this is not really that big of a deal. It did come in at 52, where the last one was at 51.8. Anytime we're above 50, that shows some slight expansion in the economy. The next one's the big one, ISM manufacturing. And I apologize if you hear drilling noises going on behind me. It came out at 50.9, and this was weaker than expected. They thought it was going to come in at 52. And the market really liked that because it was weaker than expected. The last time we had this report come out, it was at 52.8. Then construction spending also fell a lot more than expected. It was down 0.7%. They expected it to be down 0.2%. The last time we got this report, it came out at down 0.6%. Our trend is still negative, but above 20. And I've switched our bias over to kind of a gingerly based positive for our bias, just because we had a good solid update. But we had one last week as well. And then Thursday and Friday, things just fell apart. So we'll have to see. I will say that at the time that I'm recording this, which is many, many hours before the market even opens, the futures were up about 1.25%. So maybe we're going to be able to get some legs to this thing, but that could always change. We've been up 1.5% before, only to end up opening negative because something might happen. I'm still keeping our momentum at negative overall because we just had one good up day and a string of really bad days. So what's our outlook then for Tuesday? The technicals are negative, but showing improvement, but we're still oversold. A lot of these extreme negative readings, they've turned up, but they haven't come out. They haven't officially generated an oversold condition yet, which is when they go back above the line they crossed below. And we have to ask ourselves, can this continue? Are we going to see more than just one up day? We have factory orders and the JOLTS job openings coming out. Please be aware that later in the week on Friday, the employment situation report will be coming out. And we have the whole list of geopolitical events with the inflation and interest rates. That's what the market is really fixated on. Geopolitically, it's kind of switching over to this Russia and Russia-Ukraine situation. That has the potential of escalating. So we want to keep a real close eye on that. We may get some Fed speak on Tuesday. The Nord Stream pipeline, it's like, okay, and they said now that it's not leaking anymore. At least that's what I heard. And then the UK seems to be getting a little bit more under control right now. So our scenarios, it's really hard to go with the down scenario because we're oversold and possibly bouncing from that might turn into something. We can't go positive yet. We're not getting enough confirmation and we're still oversold in a pretty negative environment. And it's really hard to go sideways right now because the ADX is above 20 and it is negative currently. So our conclusion then is we are negative, but rebounding from being oversold. That's how it looks right now. If we have a down day, of course, we'll go back and be oversold again. Short, intermediate, and long term, we are showing some improvement and possibly bouncing from being oversold, but we want to see some follow through for this, from this. Okay, so thank you. Please feel free to check out the full length video. I hope you have a great day, and I'll prepare the next video after Tuesday's session.